Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, December the 9th, the year 2019. Let's talk trading. Calculated risk. I was reading an email or a website the other day, and it had nothing to do with trading. I think it was actually about science. But the bottom line is they were talking about taking calculated risk. When we trade, if we're doing it properly, we're doing it with our money and risk management in place, we put that trade on. We don't know if it's going to be a winner or a loser. So we take this calculated risk because we've done our homework and we have our indicators, we have our method, we have statistics that say, in the past when this happened, more times than not, it went this way. Pretty much, that's what we do when we trade. Because remember, the outcome of the trade has nothing to do with why you place the trade. Because trading's uncertain. So every trade should be a calculated risk. And when you think of it in calculated risk terms, it should give you the confidence to take the trade. Because if you've done your homework, if you've looked at your system, you've run the statistics, the frequency distributions, all the statistical analysis, it should give you the confidence to execute the trade when it appears. Because if you have your risk management in place, your stop loss, the worst thing that can happen, barring unforeseen circumstances, is you're only going to lose what you're willing to lose. So you take that calculated risk. And that's trading. And if you're not trading from the mindset of a calculated risk, then what are you doing? Are you gambling? Because many people equate gambling and trading. And there's a lot to say that there are some things in common. That intersection of those two Venn diagrams, trading and gambling, yeah, there's an intersection. The outcome's unknown. You either win or lose, right? Sometimes you push. So just remember that as you're trading. Now, fellow traders, I want you to keep something in mind, and that is these videos are for educational purposes only, and your results may vastly differ from my results. And trading is risky, very, very risky. You can lose all your money. So because of that, if you're seeking financial advice, financial guidance, seek it from an accredited financial professional. That way, when you lose your money, you got your advice from an accredited financial professional rather than listening to some guy you've never met on a YouTube video or read something that somebody wrote on a trading forum or blog or something, or Twitter. Okay, got the disclaimer out of the way. So here we are. We're looking at the pound dollar right now. And we're looking at it with today's open. You can see prices above the open by 18 pips. Yesterday's low and yesterday's high. And you can see here price broke out a couple times. Actually, I could put, now that I think about it, I could add one let's see, this is 1 day ago. So what we can do is we can put in, no, oh yeah, we can put in yesterday's open. And you might wonder, well, why would you want to do that? Well, kind of a simple reason. You see here, yesterday's open. There's your upper wick zone. I refer to wick zone a lot, as you traders know. So you can see here how price went through the wick zone, in and out, in and out. But simple chart, simple trades, trading at the horizontal line. And we know, based on frequency distribution statistics, that price entering the zone, wick zone, about 70% or more chance it leaves that zone. Now, how many pips? Like in this case, just a few here, just a few there. In this case, a nice handful. So in some cases you get a little, some cases you get a lot. That's trading. We can switch over to dollar yen, since that's one of my favorite pairs to trade. You can see here, not much happening until it fell through the previous day's low. Now it's crawled back through, and it's coming out of that lower wick zone. But actually, you see here, the lower wick zone is much tighter. I'd have to put yesterday's close, but usually close and open are so close together. That's why I don't have previous close on the chart. Switching over to the weekly chart here on the yen, we can see our gaps. We still have some gaps to fill. So once again, a calculated risk. We know that these gaps usually fill somewhere 80% of the time or more. I think I've shown you those frequency distributions, or gap. I think it's called gap fill statistics indicator out there. Now, as I pointed out, here we go on the weekly. You see we went into that lower wick zone, then we've come back out, and we're above it by about 7 pips at the moment. But you see only 23 pip range here. Nothing to write home about movement-wise. On the year, the month is down, the year is down, 102 pips below the open, $1 yen. And we open below the previous day's midpoint. So we'll see what happens if price can shoot through that. We're still putting in the first trading day of the week's range here. Here's our high at 0.65 and the low at 0.42. We haven't entered into the ranges from the previous or from the first day of the year or first day of the month yet. Looking at the opens, you can see where we are in relation to the opens. And day ranges, once again, you can see where we are in relation to opening range, highs and lows. Now, I think I told you about this last night, fellow traders. At the time, we hadn't gotten here, but you dipped into the inside bar on the month, and you can see here it's pushed back up, good for 16 pips at the moment. On the daily, only one pair over 100 in range. And you can see right here where the yen dropped below the previous day's low and has bounced back. And, talking about the wicks, you see here, you look at all those wicks it's cutting through on the left side of the chart. And this is all where price has moved up. So down here would have been a nice entry for dollar yen. Okay, I've got the pound dollar on this chart, looking at monthly D1 highest open, monthly H1 highest open. You can see here there were some opportunities for shorting. We can switch this back to dollar yen. And here we have the weekly high. We're right here at the weekly H1 highest open. Could look for a reversal, but you have to trade what you see in the moment. As I mentioned yesterday, let's see, we got the pivot point in between the buy zone. No real bias. So taking a short would have paid off, and you see you're headed back to the buy zone. And one thing about the yen, they move the yen through the VWAP usually a couple times a day. It just seems to happen that way, especially if things are ranging. It just seems that they just like to hit that VWAP. I think somebody loads up. Rat zone on the pound dollar. It's large enough to trade. And as we wait for the history to load up here, and you can see right here, we're right there at the edge of the green rat zone on pound dollar. Okay, the pivots on the yen, right here, the weekly pivot, 108.90, 27 pips away. That's what we're looking for this week. Let's see, this is pound dollar here. Looking to take out a couple pivots there on the yen. We need to take out this pivot for today. I only missed it by one so far, so it might take that out. On the pound dollar, you can see here the price action, just trading what you see at the line. Once again, calculated risk. And price opens here. If you go short here, you could put your stop here. As it moves down, you could always move your stop to break even plus one. And who cares if you get break even plus one 10 times or 5 times? You're making money. You're not losing money. Dollar yen, you can see here, 3-ball, green at the line. You took a little heat and then it came back. Maybe you exited, maybe you entered again, and you were rewarded. But remember, these videos are for educational purposes only. Showing the wick zone here with the wick zone indicator. We've already gone over that. And just horizontal line trades. And at the tick level, you can see what the dollar yen has been doing. We're up about 0.45 pips since bringing up this trading profile. And here at the Einstein line, once again, here we have a calculated risk. I open the chart here. It's moved a little over a spread. Okay, I think I have about 1.2 spread here. So it moved and the spread is 1.1. So it's about a spread right there. I think in this version of the indicator, spread dots, let's see. Now, where is it? No, not spread dots. Einstein. Okay. My threshold, 2.2. So I actually put about 2 pips, 2 spread threshold here. So it moves through 2 spreads worth. I say, well, trigger long, and you can see here it would have paid off that time. And, once again, kind of a calculated risk. We know price is going to have to range outside of this area. It's just, okay, if it's going up, it's going up. If it's going down, it's going down. And sometimes it works out and sometimes it doesn't. Calculated risk. And that's just how it is, fellow traders. So remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.